Hi, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before I begin our video, we want to make sure we talk about our disclosures. Any investment decision you make is solely your own responsibility. Any symbols that you see should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all your money. Any strategies you see today are for informational purposes only. Future results are not guaranteed. So this is our stock market technical analysis wrap-up for Saturday, May 28th. We're going to look at the economic calendar, the important things that happened last week or this week, and also kind of foreshadow into next week. We're going to look at both the price action of Friday and the week so that we can come up with key support and resistance price levels to watch. We're going to look at the gold and crude choice to see if there's any leading sentiment that we should be aware of. And finally, we have an education spotlight at the end. So let's begin. In the week that was, we saw all three major indices fall just fractionally for the week, and that was mainly because the market did end lower. However, as we'll talk about, we did pair some of our initial losses from the beginning of the week. Only three sectors rose this week. We were led lower by utilities. And so that overseas news about the debt crisis. So there was an intensified, concern about the debt, especially with Greece, when Standard & Poor's cut their ratings outlook for Italy from stable to negative, and we also had weak PMI data from China and Europe. We didn't have any real news, both on the corporate and economic side here on the States. So the market was able to pair itself a little bit on Wednesday, Thursday, and Friday. When we go into this upcoming week, we don't have any real key earnings. However, we do have 80 employment on Wednesday, and the employment situation, which covers non-farm payroll and the unemployment rate on Friday. So let's pull up the charts and take a look. Okay, we are pulling up the S&P 500 on a daily chart, and one thing we can see here from the beginning of May is a downtrend. Now, we broke the uptrend line from all the way back in March, basically right in this area here. And notice that as we hit that here on May 10th, we pulled back. Here on May 19th, we've pulled back, and now we've come to this point again. So we have to be aware of what's going on, and start to recognize that we potentially are in a downtrend. Now, what we can also see is sort of a descending wedge. There's our downtrend line, and we have our support line of 1300. So the market certainly is showing that it can go either way. Are we going to break through and move higher, or are we going to come on down? Our indicators, MACD is really not giving us anything. RSI is heading up. That's certainly good. And stochastics is trying to hook back up. Now, what I'm going to do, well, let's do a couple things first. First, we'll go ahead and switch out to the weekly and get a little gauge of what's going on. And we can see on the weekly, look at that, 4 kind of dojis down, down, down. So there's a lot of indecision going now. And when we look where we close, we're not really one way or the other. But what we do see on the weekly is we go out to resistance and pull back, go out to resistance and pull back. And then here we went down to support of the 20 moving average and we rallied back up. So again, this has to resolve itself one way or the other. MACD is a little bit overbought. RSI is still overbought. Stochastics are overbought. So there is room to go lower on the weekly. We'll also come out to the monthly. And let's see. We can see some of our lines still in play here. And on a monthly, we're getting ready to come into the 10 exponential moving average as support, and again 1300 as support. More room to the upside on MACD. RSI starting to head down. Stochastic is getting ready to head down. So 2 out of 3 are saying down. 1 is saying sideways to up. But you can also see that it's starting to hook a little bit. So what we see here is on our monthly and our weekly, we're starting to show indications of down. And so the multi-time frame agreement is when we can get our daily to agree with that, we have a trade to the downside. That may not happen until we do break 1300, where the daily will finally start to agree with the weekly and the monthly. Now, I'm going to switch over for a quick second and just show you what we also see here on the SPY, because the SPY shows us the wicks and the gaps. So again, we could draw that same downtrend line, which is fine. But what I really want to show you is, let's take this down to a 15-minute, and you'll see that if we draw this downtrend line now, intraday we're hitting that also. So we rallied, and then as soon as we hit that, we fell right on back down. So there are definitely some works in play here. There's definitely some lines being observed, and we just have to pay attention to that as the market may move up next week. But again, we do have a catalyst for some of the jobs data that could move us one way or the other. Let's take a look at some of our industry leaders. All right, we're starting off with Apple, and Apple overall is in a consolidation pattern. You can make arguments about this may be setting up a descending wedge, but overall we can see this big range in here. And if I grab my price level key and kind of draw on a line here, I mean you can see Apple just kind of bouncing in and out. So one thing you might see, and this is kind of what we talked about last week, is that maybe we bounce here and run back up to the top of this. That's certainly possible. But overall, there's no real trend. There's a lot of choppiness. So for a true trend trader, I'm not sure there's any play on Apple. The good news is when we come into the market profile, we're above volume support here, and we're heading into a vacuum. So there certainly is a potential play to the upside, but you can see we got the 20 to 50 moving average right above us. But as we look at this, we're going up and down right through that 20 and 50 moving average pretty much with no problem. So it's not being recognized as we're in this consolidation range. So Apple, neutral. Let's go on to Amazon. Amazon's been an uptrend. We had the great earnings, and now it looks like we're finding support at the 50 moving average. That's great. We had our initial break of this pattern right here. That was a great trade. Now, I'm pretty much neutral on this one here. There's a little line here, and if you wanted to, we can draw a new downtrend line. But I would be more neutral on this one. Let's see this real quick just to see what this does. And look at that. So this action here took us out of that uptrend line, and now we're consolidating. So neutral on Amazon. So far we don't have really real strong leaders here, but let's keep going. Goldman Sachs. Anybody been watching us for a while knows that Goldman Sachs is definitely weak, but buyers are finding a little bit of value here. Certainly above volume support on our market profile. But I don't see a long in this one yet. What's good, and this is what we talked about in our video last week, was that there was a lot of air between where Goldman Sachs was and the moving averages. So it does look like we're getting a pull back to those moving averages, and I would look for a short at that point. What about Google? Google also showing some weakness. If I switch over and kind of draw our line here, zoom in a little bit, finding a little support at 515. Certainly a downtrend line here. We are right at volume support or resistance, which way we're going to be. We need to get below 519 to get a run back down to 515 to see if this is going to hold up. So we've got two neutral, and we've got Goldman Sachs and Google more bearish. You can really say four neutral, but let's keep going on. Let's go to Priceline. Priceline, certainly in a nice uptrend line. However, it looks like it's breaking a little bit. Let's shrink that down again. Draw a trend line. Where do we want to draw this? Let's try here. See what we got. Okay, zoom in. potentially breaking the uptrend here. We can also draw right on down. And finally, let's switch over to our price level here. And definitely another one sideways to down. Broke the key uptrend line. Price line certainly looks like it could break out to the downside. Netflix. So here's our first positive. Netflix is keep on keeping on. Making new highs. That's great. Little doji here. Could be a mat hold, rising three pattern here. Market profile, a lot of volume in here. You can see because we traded here for several days that there's a lot of volume here. So this is our first positive one, so that is certainly good. So we have 4 sideways to down patterns and 1 positive. So that's telling us our market leaders are definitely showing us that there is a more tendency to down than towards up. Okay, as we look at gold, one thing you can see, we drew this downtrend line, and you can see the breakout that we made this week. And the other thing we should watch is basically right where we're closing, and that is little resistance here at this 540-ish price level. Support down here, 1480. When we come over to market profile, we can see, the last couple hours we're traded in here. It certainly looks like we can move higher. It certainly looks like we can move higher. And retest our 1577. But gold is something weak, and that is if the concerns over the European debt is going away and the dollar is going to weaken, then there's going to be that flight to gold. So I would definitely put an alert here at this 1543 level to see if we get a run that tests to 1577. As far as crude is concerned, Crude did not break out. Well, let's take it back. You can see we broke out of this, but we only broke out consolidation and to the 20 and 50 moving average. So it looks like the 20 and 50 are holding up as resistance. And when we look at the market profile, you can see there's just a ton of volume here because we have 2 weeks of trading in this zone. So it's going to be tough to get this one to move one way or the other. We really need to get below 99 to even think about getting, breaking 100 to the lower, and we need to get about 101 to think about going any higher. In our education spotlight, we're looking at what high probability traders do, and the best traders always trade when the odds are in their favor, not just because the market's open. Again, last week we talked about trade your plan, build your plan, trade your plan, and today we're talking about trade for a reason, and that's to make money. You don't have to place a trade. Just because the market's open doesn't mean you have to trade. There are several days that I don't place any trades. If it's not something that I believe in, if it's not something that matches who I am as a trader, then I don't take it. It's better to not trade than to trade and lose money. So trade for a reason, and that's to make money. You can find us on Facebook, YouTube, and Twitter, either as What Was Mike or Are You Financially Literate? That's our page on Facebook. You know about our free 5-part course. It's a video course on high probability trading. It will help you trade for a reason. It will help you to trade your plan. We also have a free trader's mindset package that will help you. All of that will help you see the importance of our mentorship sessions where we can coach you and hold you hand one-on-one and give you the help that you need to become a high probability trader. We've got a great futures broker to give you 20 free trades and low intraday margins. And we've got a great charting package for those who are scanning with great scans, great filters to help you find new stocks to trade. In the end, it's not about the system, it's not about the indicator, it's not the room that you're in. It's about who you are as a trader. And we, through our coaching program, can help you build that psychological capital that you need to pull the trigger. Thanks, guys, and I'll see you next time.